Wall Street kicked off 2025 on a choppy note, navigating a solid labor market and a stronger dollar, juxtaposed with jittery investors worried about sky-high valuations for tech titans like Tesla, all while hoping for artificial intelligence's bull run to continue. AI helped catapult the Nasdaq and the S&P 500 to multiple record highs throughout the year, even as some experts worry about an AI bubble. Other asset classes, including a surge in gold prices, also buoyed markets.
Wherever you threw a dart in the dark, it blew up in value. Gold, stocks, real estate, everything has just done fantastic. And that's the problem, that most of us get too complacent. We feel like we're entitled and we're not ready for the bottom to fall out.
Despite broad gains, stocks and the U.S. economy also took big hits as a result of U.S. President Donald Trump's tariff agenda.
Trump tariffs have essentially disrupted global supply chains. And so we have these trade relationships which are quite fractured now. And in many cases, they are with the main trading partners of the United States.
The tariffs also reignited trade tensions with China that required careful navigation to cool, and according to the International Monetary Fund, clouded global GDP growth. Nevertheless, U.S. companies became more nimble, finding ways to mitigate tariff threats, and American consumers stayed resilient, coming to the rescue of the American economy time and time again in 2025. Trump also challenged the Federal Reserve, in particular its top chief Jerome Powell, saying interest rates were too high. He blamed Powell for rising costs and a housing and affordability crisis in the U.S. But the outgoing Fed chair stood his ground.
If you get away from tariffs, inflation is in the low twos, right? So it's really tariffs that's causing most of the inflation overshoot.
The U.S. Central Bank did cut interest rates 3 times this year as it tried to balance stubborn inflation with a cooling labor market and rising unemployment. Volatile cryptocurrencies also found fresh highs in 2025 thanks to an influx of institutional investment and a more favorable U.S. regulatory environment. One expert predicts while crypto has taken a downturn recently, 2026 will be positive.
I believe that there is a lot of room to grow, that there has been a massive shift from being, in the case of Bitcoin, something that was very obscure from anonymous people to anonymous people into becoming one of the most accepted asset class and most popular asset class of the last decade.
Analysts Hamrick and Grace are cautiously optimistic a recession is not in the cards for 2026, but both remain wary about current economic conditions.
If you take artificial intelligence out of capital investment, it is essentially flat in the United States. And then you have sectors like manufacturing, like the housing sector, which are not doing well at all.
It's not about the prediction. To me, it's about the preparation. And most of us are not at all prepared for the losses. We haven't figured out what are our exit strategies to get my life savings off the Titanic as opposed to watch it sink.
A cautionary tale that looms even as President Trump, whose administration just weathered the longest U.S. government shutdown in history, has promised an economic boom in 2026. Karina Mitchell, CGTN, New York.